Hello everybody, it's Bob Anderson, and I thought I'd do a video that will discuss the order of operation of trades. And what I mean by that is, in my opinion, which supports, resistance, pivots, whatnot, are more powerful than the others. And I bring this up because I had somebody message me recently on the overnight open trade. He wanted clarification on when price, as you guys may remember, on the overnight open, if price runs up to the overnight open and then rejects, and this is your trade, that you're taking a short north of your 5-minute red line, was that valid? And I'm like, well, yeah, it is valid. And then I started thinking about it. I'm going, well, I haven't made it clear that it's valid, because all I talk about is trading in the right direction of the 5-minute 21 SMA. So I thought, well, let me do a video that talks about the moving averages and the overnight open and my opinion of strength to kind of help clarify some things. Because this goes in the sequence of my trade strategy videos that I'm going to be doing, or that I'm going to try to link all together into a playlist. Because the overnight open is, in my opinion, based off of my trades, the most powerful one of them all. And for those of you that may or may not be paying attention to that trade, I say that because if you watch it at times, when you have a rejection, it doesn't even care about these lines. It is a line in the sand on consolidation days. Days where the market isn't running one direction or running the other. You'll find, just go back and look. As long as you got the right overnight open, the 6 p.m. Eastern Standard Time open of the day before, as your line, you'll see there's a battle north and there's a battle south. And so what that area becomes, what this line becomes as a line in the sand, becomes a great place for pivot trading. I take it right now currently as a trade, say it runs up to it, tests it, and then circles back. I take it for my 5 points, for example, in the ES 20 ticks. But if you really watch that trade, like for example, even on Friday, it ran right up there Friday afternoon on the ES, hit that spot, consolidated, turned around, and ran right through here, right through here, right through here, and just kept right on going for about 20 points. Great swing trade. Oil, the same thing. When it comes and tests that thing and pivots from it, it'll run 50 cents to $1. I mean, it makes a good pivot location for some swing trades, longer term trades. But not a great place, not a great trade, for example, if you're still in an evaluation or still in a in a situation where you got a trailing stop. Because, like the ES one on Friday, that was 20 points. Well, if you were shooting for 25 and it rotated back against you to break even, you just had 20 points drawn against your drawdown. Anyways, but once again, that is my most powerful one, unless, remember 1, 2, 3. Unless you're on attempt 1, 2, 3 to break your overnight open, then these lines start becoming the powerful ones. Okay? But just as an attempt, that's more powerful than these. Okay? Then the next one is your 5-minute red line, which is your 21 SMA on the 5-minute data. That's number 2. It, just like the overnight open, is a great swing trade, especially in oil. When you rotate to the opposite side, if you do rotate to the opposite side of the 5-minute red line in oil, and it rotates, I'll have to explain that, but I'll explain it right now. If price runs through the 5-minute red line, especially in oil, what you'll find is it'll go to the backside of that 5-minute red line, and then bam. This retest of the backside of that 5-minute red line in the rejection, this is your swing. And that, 50 cents to $1. Just write the money down. Just actually just pretend it's already in your checking account. That's 50 cents to $1. That's why I say in the late afternoons, again, it did it. Gosh, I got oil right here. Hold on here. Where's oil? Here's oil right here. Here's oil right here. Why don't I look while we're sitting here? It did it again on Friday. Right there. 2:30 in the afternoon, 2:26 to be exact, on Friday. Rotated, pulled back, tested oil, and ran up in 20 minutes. Not even 20 minutes, 15 minutes. Ran up for 40 ticks. That line right there, 40 cents, $400 contract in 10 minutes. Anyways, but if it had broke through it, what it would do is it would rotate. Most of the times it'll rotate back to the backside, and that's your swing trade. So your swing is either here, which is the rejection back in your direction off your 5-minute, or your push through and your retest and your swing. But this is your second most powerful line. This is your first most powerful line. By the way, the overnight open, if it plows through, it does the same thing. It does the same thing. If it plows through your overnight open and comes back, it's going to retest it, and that's your swing. I don't know if you guys have ever heard about that, but the push through and the retest, that is price action at its finest. When it blows through a line, it comes back, especially your swing lines. This is a swing indicator. This is a swing indicator. Your 5-minute 21 SMA off your 5-minute data, that is a swing indicator. Your overnight open, that is a swing indicator. Just look at price around those two lines. If they break through, they have a tendency to rotate back up, test the backside of them, and bam. That's your swing. And that's your 40, 50, 60 ticks. That's your on the ES, for example, up here, or on oil right here, that's your $1. That's your 25 points. That's your swing. You got to get through your evaluations, get through your trailing stops with your accounts with UProfit or Apex or whatnot, and then you start learning those things. And that's where you're taking one trade a day and making your money instead of working so hard. But anyways, so now you know the second most powerful line. And your third one is your 5-minute 9 EMA, and your first one is your continuation trigger line, your 9 EMA off the 1-minute chart. So what does this mean in trading? Well, what this means in trading, if you remember, I talk about this. So when you're going to take a long, for example, off of either one of these two lines, my contention is to be north of this, because the market's pushing. If price is north of your 5-minute red line, then the market's pushing it north, pushing longs. If you're south of your 5-minute red line, then it's pushing it down, has a tendency to be pushing down. If you're in the area of the overnight open and price goes like this, price goes up, and we're going to learn this right here, then down into this. So, and it all meets your guidelines to be a continuation trade. You know, it's got the smooth pullback, it's got the thrust, it's got all the stuff that you're looking for. And so this is your entry. Let's just say, if this right here is not going to be enough profit for the risk, it's not a trade, because you're taking a line 4 into a line 1. That's a mistake. You're going to a knife fight when your opponent has a gun. So that's not a trade. Same thing here. If price runs up, comes down to your gold line, your 5-minute red line. Your 5-minute gold line. And your entry is here. Helps if I keep my freaking colors right. And then your long is here, and this is in the way of your targets. You brought a little bit more than a knife this time. You might have brought a bow and arrow, but you're still going against a guy with a gun. All right? So that's not a trade. If you don't have enough room to make a reasonable profit for the risk that you're taking on the trade, because you're about to get shot down right there. And then the same thing with your 5-minute 21 SMA. Same thing. The likelihood of it happening is more off these two, because this one's always lagging way behind. Okay? So, same thing. Why do you not care? I'm going to give you another one to think about. If we're doing a 5-minute 9 EMA, these last two pieces are very important, because I get so many questions about this, and apparently it's not sinking in. So, if you're taking a 5-minute 9 EMA trade, your 5-minute gold line trade, long, let's just say. Notice I always harp. Are you on the right side of this red line, the 5-minute red line? If the answer is yes, then you can go long. Notice I never ask you about this. Notice I never say, where's your 1-minute gold line? Make sure your 1-minute gold line's not in the way. Notice I never bring that up. You know why? Because of order of operation. This is a number 3, and this is a number 4. So this number 3 is going to push up here. You'll see it hang out there and get squirrely. You guys that have been trying this strategy long enough, you'll see it hang out and get squirrely there. And those, and by the way, people trying to take shorts off those because they don't have the longer term indicator on there to realize that they're taking a bad trade, they get whipsawed, because then it breaks through and it keeps going. Because this is far more powerful than this. And this is more powerful than this. So you just got to understand your sequence. Now, where does the power go away? Well, the power goes away when it's in reverse. Like, perfect example. You got price that ran up through here, hits the backside of your 5-minute gold line, and it pushes it down to the red line. Red line pushes it back. Then the gold line holds on and pushes it back again. And the red line pushes it back. And then the gold line holds and pushes. What do we say, folks? That's it. There goes the ghost. When the power shifts is when you do the 1, 2, 3 that we talk about. The same thing up here. If this 1 minute 9 EMA keeps rolling up, and this comes up and pushes it, and then this goes like this again and then pushes it. When it gets to that third one, boom, it's gone. Okay? So that just means your knife, you know how to throw it better than the person with the gun knows how to shoot. So you finally wore them down. Remember the 1, 2, 3. That's when the number 1 gets overwhelmed by the number 4. But it's going to take that third attempt off of number 4. It's not going to happen on that first attempt unless there's news or some bullshit going on or something that has nothing to do with what's going on in that chart. Some idiot from the Federal Reserve is talking or some shit like that. Other than that, it's gonna meander up and then it's gonna come right back and punch you in the face. So, just a little side note on that. That's why on the indicator that I'm having programmed right now, one of the things that's going to be on that indicator, and then I'm going to get to one more point and then I'm done, okay? So, one of the things that's going to be on that indicator, let's just say you got a trigger for the 5-minute gold line, okay? What's going to show up on that chart? What's going to show up on that chart for that indicator is the entry price of the break of the candle that's the current break of the candle. So it's going to give you the entry price. It's going to give you the projected stop loss, where it is on your pivots, based off of your ATM that you're picking. So if you're going with 10 tick or 15 tick or whatever, it's going to be a simulated line on your chart. And then whatever target you're using, 20 ticks, 30 ticks, whatever, it's going to throw that target on your chart. So you're going to visually see that if this trade triggers, if this candle breaks and you've got your entry there, that's what your ATM is going to throw up as your target and your stop. So you're going to visually see that trade on your chart before it even enters. It's one of the things I've added to that indicator. I'm still testing it. Okay. I spent probably 3 hours on the phone with the programmer on Friday alone, just to try to hone in some things and clear up some trade counts, because I want to get the trade counts right, how the trade counter's working, so that I'm not telling you that this is a trade when it's the third touch and things like that. Okay. And I want everybody to know I'm creating this indicator to be conservative, because what I really wanted to do is highlight the best opportunities, not all the opportunities. Because it's not about the quantity of trades, it's about the quality of trades. All right, one more thing I want to talk about, because apparently when I say this 12 times, it doesn't sink in. So I'm going to say it for the 13th time. 13 might be the charm. All right. So let's say we're doing a continuation trade or any of these damn trades. I don't care which one it is. All right. And let's just say that this is your line. This is your entry line right here. Or that's your trigger line. Okay. So here's your continuation red line. All right. And here's price just running up. Running up. Running up. All right, then you got your pullbacks. Here's your pullback. There's your wick here. And here's your wick here. And by the way, this stayed below that. Yada, yada, yada. So you had your smooth pullback. Please tell me I don't have to explain that again. So, now, at this point in time, when this candle closes, because this wick is lower than that candle there, and this wick is whatever, and all that stuff, and we've pierced this 1 minute gold line, At this point in time, when that candle closes, your potential entry would be one tick above that wick. Don't care about the body. Don't care about the color of the body. Don't give a rat's ass about any of that. All I care about is the whole price action that happened in that 1 minute. Doesn't matter where the candle opened. Doesn't matter where the candle closed. None of that matters. What matters is the body of the candle. Did the body stay north at any point in time in that minute of that 1 minute gold line? And did it pierce the 1 minute gold line? The moment it pierces, then it's in play. And it stays in play until the top of this candle is broke. So let's continue. Next candle opens. Okay, so this is the red, so this is the body, bottom of the body. So the next candle is going to open here. And it has a wick that goes to here. Woo-wee! And then the body comes down here. And then it closes. Okay? Please tell me that everybody watching this video knows that this trade has now become invalid. And why did it become invalid? Because the top of this candle right here, don't care about the body. I don't care about the body. Don't care where it opened. Don't care where it closed. The whole price action for that whole minute, which is from here to here, that's the whole price action of that whole minute, stayed below that 1 minute gold line. When it does that, trade's over because your entry is going to be into the backside of that gold line. And if you enter into the backside of that 1 minute gold line off of a 1 minute trade, it's going to reject it back at you because you're taking the trade off of nothing but that 1 minute. You don't have a more powerful line behind it. Now, how do you override that? I'm going to tell you how you override that. The only way it would override it is if behind the scenes, while this thing broke through, it pierced your 5 minute gold line. Now all of a sudden, it's a 5 minute gold line trade. It's no longer a 1 minute gold line trade. And it pierced it here, and the break of it here, long gone. Same thing, if the candle kept coming down, the next one, and closed here, it's on the bottom of that 5 minute red line, 5 minute gold line, no longer valid. The moment the whole price action is below that 5 minute gold line, no longer valid, unless once again it had pierced your 5 minute red line and you took that long, which, by the way, that trade right there in the afternoon in oil will pay your mortgage, buy you all the cars you want, and make your life easy. Go back and look at that trade right there in oil in the afternoons. It didn't just happen on Friday. It happens almost every day. And some of the days it goes for like $1. It's actually pretty amazing. All right. So did I get excited enough? By the way, this is the second time I've done this video because the first time I did it with a subscriber mailed me some new markers, and he thought he was. I mean, he was helping. I'm excited. I'm always excited to get new markers. But I already did this video once, and I even uploaded it on YouTube. And then I watched it, and I said I can't even see the lines because I tried to use this as my gold line, and it didn't work. So I'm redoing the video. But anyways, 91% of the people that watch these videos are men. So I just want you to know, guys, in case you forgot, Tuesday is Valentine's Day. So if you have a Valentine, don't screw up. I guess apparently I'll be buying some treats for my dog. Lastly, because it's Valentine's Day, that is the last day of the Apex sale for 80% off. So their little Valentine special they're having. If you are going to buy some evaluation accounts, please use our coupon code of AGIBQTJY. I'll have that information in the description down below also. Everybody, have a good day. I'm going to give an update of my trading journey as my next video. Talk to you later. Bye.